Let's explore some of these themes in a little bit more detail. You've given us your top-line thoughts on what's going on in Treasury markets then. So we're seeing Treasury yields rising, again, the Treasury sell-off. We're watching then for any later reaction to Christine Lagarde's comments in terms of the European narrative. Or do you think the European narrative is sufficiently pushed back by Christine Lagarde in yesterday's session?
Short term, maybe yes, but ultimately no. She can't put the genie back in the bottle. The yields are going to continue going higher overall this year. We did talk about in yesterday's show, had they gone too far too fast. This is a regime shift. You don't price in a whole new regime shift in the space of a few days or even a couple of weeks. We're going to take months to play out, and short term, we'd maybe gone too far. So I think that Christine Lagarde, it was easy market to push back on. She had a big impact with her comments, but I think that overall, in the coming weeks and coming months, we have an upward yield pressure overall in Europe.
Interesting that you pointed out on the GMM next to you there, Mark, the commodities column that does look a little bit red. But we've got a chart coming that shows Bloomberg Commodities Index up at new all-time highs, and that has been part of the story over the last 24 hours as well. It's interesting, isn't it, when we look at some of the narrative around geopolitics, President Putin pledging to do everything to find compromises. That's in the copy being written up by our colleagues. I know some other news outlets have some interesting copy as well in terms of the Russian stance here. Are we seeing anticipation of better times for geopolitics, do you think, in the commodities space?
I'm not so sure that can be blamed for commodities. Part of this might be because we're seeing the stronger dollar, we're seeing the higher yields, and that's why commodities might be easing back a bit. Most importantly, oil prices are still right up by the highs overall. However, in the last few days, generally, we have seen a slight pricing of de-escalation. You can see that in how the Russian ruble is trading and how some of the regional stock markets are trading. So I think that the tensions, according to traders, are not as tense as they were maybe a week ago.
OK, so that's the commodities side of things. Lingering a little more on what we've seen out of China then, Mark, it seems as if, I mean, it's not all the Chinese stocks are down. Shanghai Composite to the upside, but we saw the CSI a little bit weaker, and tech stocks. What do we make of the moves we've seen in Chinese tech, responding or not responding to weakness in US tech during the Lunar New Year?
So I think that many people thought this was a market that's heavily discounted and therefore might benefit from some of the outflows out of US stocks. Obviously, it'll be hard for Chinese stocks to do well. It'll be hard for any stock market to do well in an environment where US stocks are under pressure. But certainly they might be best placed to experience a rebound and might suffer a little less during when stocks are overall under pressure. However, the price action is very negative. And this is with a backdrop of an exceptional amount of easing recently from the PBOC. I think what this tells you is that, you know what, it doesn't matter if the PBOC is easing a little bit when the rest of the world is tightening overall. And that is going to be the theme of 2022. Generally, most days we're going to walk in, we're going to see yields slightly higher, we're going to see a tough environment for risk assets. And I think it's that micro environment which is starting to overwhelm some of the micro or some of the more country-specific things or some of the country-specific positives from China.
Yeah, and we're certainly in one of those days right now, aren't we, Mark? Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV GO, that is the function to use on your terminal.